Crypto Hotep here with another investing video. We're on week 66 of the family portfolio and dividends tracker. Now, if you're unfamiliar with these videos, feel free to go to my channel right here. Go to week number 1, where I go over my whole methodology and why I started doing this. Basically, in a nutshell here, I gave my family a short list of stocks / companies to choose from that they felt comfortable with. They made their selection, and then we proceeded to use M1 Finance as our broker of choice, because with M1 Finance you can create a big portfolio and then have smaller sub portfolios in it. And so every one of my family members, they have a sub portfolio with his or her own choosings of stock holdings, and every week we go through this portfolio. We go through everybody's holding, and we go through balances, dividend activity, how we're feeling in the markets, and any position changes. These videos are strictly for my own edification first and foremost, and for my families, and I hope they're helpful. If they're helpful for you, feel free to like, subscribe, comment. It helps out the channel, but by no means is this financial advice. Now, with that out of the way, before we go to week 66, we go to week 65. So week 65 saw us with a slight dip. Our balance was at $2392.57, so a little bit below $2,400. We had a negative gain year to date of negative 0.79%. That equated to a market gain, or a total gain, of negative $16.25. So with week 66, how are we looking? So with week 66, our balance got boosted up to $2,596.15. That equated to a money-weighted rate of return year to date of 1.54% positive. And our gain was about $31.99, with $13.82 dividends earned. So let's look back and see what's happened between this week and last week. So we're going to start here on June 26th, because we covered the 5 buys at around June 20th. So June 26th, we saw a dividend payment from Meta of 1 cent. We did have a dividend deposit, or not a dividend deposit, but we did have a deposit of $155. Now, if this is your first time watching this video, typically our deposits are very small, because we want to show that you can build wealth over time if you just take your time. But if we are blessed with maybe an extra payment from the job, a bonus payment, then we will put money into our brokerage account here, and we will be doing some buys, i.e. what happened here. So we were blessed with a little bit of an extra payment here, so we deposited $155 here, and then we made some buys today. Okay, so we have 15 buys, and what do we get? We got a whole slew of stocks here. So we got some Google, Berkshire, Pepsi, Chevron, Tesla, Sony, Amazon, Target, Waste Management, Meta, Costco, Apple, Google, Starbucks, and McDonald's. Okay. And we also had some dividend activity. So we had 9 cents from Kraft Heinz and 35 cents from Public Storage. Now, again, if this is your first time watching these videos and you're looking at the dividend payments and you're like, Crypto Hotep, why are you so happy about 35 cents and 9 cents? Well, with me, dividend stocks and dividend holdings, they mean a lot to me because of the consistency of the payment. Right now, I'm not looking at the actual number. I'm not looking at the actual amount that I'm getting. I'm just ensuring that I'm getting that payment, whatever it is, consistently, and it is increasing as time goes on, because I'm increasing my shares or my holdings in those companies. And that's kind of the basic stream of passive income, and that's what I'm trying to develop here. So with that being said, guys, let's go to the family portfolio here, and as we always do, let's go bottom to top. Okay, so bottom to top here, my wife is at the bottom, but if you look at her year-to-date performance, she's blowing everybody out of the water. So her money-weighted rate of return is a positive 15.96%, almost 16% year-to-date. Tremendous. Dividends earned $1.30, market gain of $27.96. And so her balance currently a little bit below $300, but she's going to crack that at $297.82. Look at that chart. Just amazing. Year to date. Okay, let's see what's going on here. So Celsius has been boosting her portfolio extensively. Okay, so let's jump right into Celsius here, because I mentioned this before, and I mentioned this 2 or 3 weeks ago, and I said Celsius still has room to run, and that was at $30. Look at what Celsius is right now. Celsius is at $45.89 per share. People were counting Celsius out and said there was no more gas in the tank. Guess what? Celsius is still moving. And I still think there's some more runway for Celsius. So currently my wife is up 83.55% year to date on her Celsius holdings. Pepsi, we are down, unfortunately, down over 10% on Pepsi. I really think this is a buy the dip moment for Pepsi. Google down over a little bit over 1%. And then Tesla, again, closing the gap on Tesla. We're down less than 5% with Tesla. I'm okay with that all day. Okay, so let's look at our middle stocks. Our middle stocks, very consistent stocks here. We have a positive rate of return, money weighted rate of return of 0.74%, dividends earned of $1.47 with a market gain of 18 cents. So that equals a balance of $307.14. So our middle stock looks way better than it did for the past 2 weeks. We're seeing a little bit more green here. Target is still the outlier here, down almost 21% on Target, but the other stocks have made up for that tremendously. Amazon up over 5%. Costco continuously in the green, up over 7%. Starbucks finally turning the table here, up less than 1%, but still up. Google up over 22% on Google. Sony up over 20% on Sony. And then Tesla down over 11%, but again, we're closing the gap. Okay, let's look at our youngest stocks. Starting to get up there here. So money weighted rate of return year to date of a positive 3.3%, dividends earned of 0.87 cents, market gain of $7.56, balance a very impressive $345.75. So again, very similarly with our middle, Sony up over 26%. Costco doing what it does, up over 11%. And then Starbucks, as we mentioned, turning the table here. Now, Apple, we're still in the red year to date on Apple, down over 16, almost 16.5%. And then Tesla, again, closing the gate. It's just taking a little bit longer than anticipated, down over 10% on Tesla. All in all, I think this is a very good portfolio here. Sony has really stepped in. We just added Sony several months ago here, and as of right now, it is the top holding in that portfolio. Okay, let's go to our Otis. Our Otis, unfortunately, is the only portfolio in the red right now. So a negative 7.79% year-to-date return, money-weighted year-to-date return. Dividends earned of $2.90, market gain of a negative $60.19, and that equals a balance of $7.89.19. So what's going on here? Apple, very similarly to our youngest, down over 18% in Apple, and then Tesla again, almost 15% down in Tesla. But Costco and McDonald's is turning green here, and Costco continuously doing what it does here. Okay, but again, we're still buying. As you saw, one of the buys this week was McDonald's here. So again, we're buying the dips. We're just continuously putting money in the market, and we've invested into really good companies. So we're just letting the market do what it does right now, and we're believing in the companies that we've purchased. So last but not least, go to mine. Mine, we have a money weighted rate of return of 7.31%. Pretty impressive right now. I'm happy with that. Dividends earned of over $7.28. I really like seeing that too. And then a market gain of $42.66. My balance currently year to date is $856.25. So the biggest move between this week and last week is technology. Technology has boosted up over 15%. Why is that? Well, in particular, we have Amazon holding its own weight, Coinbase just on a tear up over 42%, Nvidia again recapturing the world's largest asset, I believe, currently from Apple, or the most valued company over Microsoft and Apple, I believe, is Nvidia again. But again, Apple down over 19, almost 19.5% here. But everything else is boosted. And this is kind of that roll of the dice, right? So, and what I mean is the technology sector is always going to be a very volatile sector, as you can see here. Now, when it's bad and everything's bleeding, and your tech stocks, they bleed the worst. But when it's good, look at these percentages. Now, again, this is a smaller account. So yeah, the values aren't there as of right now, but again, we're building this. I focus more on the percentages because I'm like, hey, if we can get these percentages with these small amounts, if we continue to be disciplined, just imagine what we can do if we're just building these positions up. This is tremendous here. So tech is holding its own weight, up over 15%. Finance up over 7% with finance. Industrials and energy has not been red once this whole year, and I've mentioned this before. Consumers and staples down over 3.5% here. Restaurants and food, which is very surprising, is up over 5.5%. Coca-Cola, the GOAT, never has been a red reading or red week for Coca-Cola this year. Texas Roadhouse rebounding here, up over 12.5%. And then SJM Smuckers, they did have pretty good earnings this week. And they also said that they're going to be removing all the artificial dye by 2026, down over 11.5%. I believe they stated a ex-dividend date, so that might be the reason for that. Everything else is in the green here, which I love to see. Okay. In real estate, down over 1%. Pharmaceuticals up over 1.5%. And then our growth stocks up over 26%. What's going on here? So Tesla following suit, no matter the portfolio, down over 18% in Tesla for me. Palantir, though, holding its own. CrowdStrike holding its own. And then MicroStrategy obviously holding its own here. Okay. And with that being said, guys, we will close this one down. So for the week of 66, our balance is $25.96.15, $4 away from $2,600. We've made tremendous progress. Just look even at this year. The beginning of this year, January 2nd, 2025, we were at $1,654. We are currently nearing $2,600. Just an amazing feat here. Our total gain year to date is $31.99. It's really not bad for a very up and down market as it's been this year. There's been a lot of volatility. There's been a lot of swings, ebbs and flows, everything. We are currently positive, and we're still putting money in the market. Dividends earned of $13.82 with a money-weighted rate of return of 1.54%. Now that percentage, again, year to date seems small, but as I mentioned, a very volatile and trending market here that's just kind of ranging is the reason behind that. But in all honesty, we're just going to stay the course, keep putting money in the market, and keep buying those companies that we believe in so much here. So if you found this video helpful, feel free to like, subscribe, comment, guys. Let me know what you think. But as always, thank you and happy investing.